Good morning, everyone. The webinar today will discuss the news release dated February 27th, 2023, announcing the friendly at-market merger of Integra Resources and Millennial Precious Metals. The team is excited to take you through the merits and rationale of the deal. The panelists joining us today will make forward-looking statements. Please refer to the news release dated February 27th, 2023 for the necessary disclosure, as well as the presentation announcing the merger on each company's website. Joining us on the call today are George Salamis, President and CEO of Integra Resources, Andre St. Germain, Chief Financial Officer, Integra Resources, Jason Kosek, President and CEO of Millennial Precious Metals, Jason Banducci, Vice President, Millennial Precious Metals, and myself, Josh Surface from Integra. The company has prepared a brief presentation for the webinar, which will be followed by a question and answer session. We'll try our best to answer as many questions as possible. However, if we don't get to a question, please feel free to reach out to the email address that was included in the Zoom invitation. And now, without further ado, I'll hand it over to George Salamis and Jason Kosek to take you through the presentation.
Good morning, everyone. It's really exciting to be talking to you all this morning about this transformational deal, this business combination, at-market combination, consolidation in an industry that needs to be consolidated. It's our forward-looking statement, just asking you all to have a really detailed look at that. So essentially what we're talking about in terms of transaction highlights, what this does in terms of putting these two companies together at market, no premium, no discount, is it creates one of the largest precious metals exploration companies and development companies really focused on the Great Basin with two great stories, two sets of assets, our asset on the Integra side, coming from Delamar. We'll talk about that in more detail. And Millennial's great assets just across the border, also in the Great Basin in Nevada. To our knowledge, there's nothing else like this out there. On a consolidated basis, we combine the resources together. We get to over 6 million ounces, more than half of which is oxide, potentially heap leachable from our perspective. And so in our view, there's nothing else like this. It's the consolidation that's needed in this space that we're all working in right now. What it does is it gives us a really robust pipeline of projects, not just one horse in the race, but essentially three horses in the race between all of these advanced projects. When fully developed, we believe we'll be focusing on a production level in excess of 200,000 ounces of gold equivalent per annum. Again, something that's really scarce and really rare in the industry right now, that sort of scale, unprecedented in our view. In addition, this is all about the team, putting these teams together, combining two leading junior gold exploration development teams that have done it before, a strong record of project development, a strong record of M&A transactions, and a really strong sort of market presence. And that's one of the things. But that basically leads me to one of the biggest strengths of this deal, the permitting and development team that when deployed on Delamar, gets Delamar up and running and through the permitting hurdles, and then basically goes from Delamar to the assets across the border into Nevada, Wildcat, and Mountain View. These sorts of teams, these development teams, typically are the key ingredient of success in any major mining company is a strong development team. And having the ability to deploy our permitting and development team, not just on one project, but on three projects, obviously that has a myriad of benefits. And then finally, sort of the financial strength aspects of this deal. The market-facing aspects of this deal, obviously further solidified by the presence of Wheaton Precious Metals in this deal from a financing support perspective, and also from BD Capital, the merits of which we've talked about in past news releases. This partnership with Wheaton really provides a really strong project validation. They've done their due diligence and they've decided to back this as something that they will keep in lockstep with us on all of these project development scenarios right to the finish. Maybe over to the next slide, and I'll pass things on to Jason.
The beauty about this is really this multi-asset approach that is really needed in the industry to check all the boxes. And there's a significant issue with single asset companies, especially from a permitting perspective. As it goes into a permitting stage, we'll call a spade a spade. There's always something that comes up. And by having three horses in the race, really mitigates against that risk. Not only that, with the exploration portfolio that we have and the resource growth potential we have at Wildcat and Mountain View, what this does is really fills in the valley in that Lassonde curve. So we can have projects in a permitting stage, but also still deliver news flow and exploration growth to keep the market excited and really relevant.
I'll jump in here, Jason. Thanks everyone for being on the call today. So this is just a snapshot of the transaction summary. I'm not going to go through this in all detail. Like my colleague Josh mentioned earlier, this presentation is available on our website, and you can also refer to our February 27th press release. But in summary, it is an at-market transaction. So every common share of Millennial will receive 0.23 Integra shares. And we expect the pro forma ownership to be 65% Integra and 35% Millennial. And in terms of timing, this transaction will require a shareholder vote from Millennial shareholders. We expect to mail materials by the third week or late March, and we expect a shareholder vote and close of the transaction in late April, early May. So the pro forma company will have over 120 million in market cap. As you can see on the right side, 65% Integra ownership, 35% Millennial ownership. We think it's going to be a very stronger company on a pro forma basis. As you know, Integra is listed on the NYSE. So we'll have TSX listing, NYSE listing. We believe we'll have increased liquidity. And I want to point out on the right side, you see the post-financing pro forma. We are extremely pleased to welcome Wheaton Precious Metals as a new shareholder and as a strong and supportive shareholder. And we think it's quite the endorsement of the project, an endorsement for the team. And we look forward to working with Wheaton Precious Metals in the upcoming years as we develop our projects. And last thing I just want to, leave you with, if you look at the bottom, the pro forma, pre-financing pro forma, if you want, shareholder base, which is really strong between management, current strategic and institution. This represents about 60% of the pro forma company.
So for those of you maybe on the MPM side who don't know about our key asset, the flagship, the project that will quite frankly remain the flagship of the combined company is the Delamar Heap Leach project. It's a project that we acquired from Kinross over 6 years ago, a past producing mine. It was in production up until 2000 and 2001. And so what we did essentially with this project that was a past producing gold silver project was we decided to look at it from a different angle. And that different angle is, what does this project look like from a heap leach perspective? We knew that there was a lot of oxidized and partially oxidized mineralization on site, which could be potentially amenable to heap leaching. So over the course of essentially 5 to 6 years, we grew the resource base from zero to a point where it's at today. You can see the mineral resource breakdown there at the bottom. But essentially, it's a 5 million ounce resource, which comes with about 2 million ounces of oxide mineralization, which has been the subject of a pre-feasibility study, which we put out last year. And so what we did with this pre-feasibility study was we essentially looked at it from 35,000 tons per day as a heap leach mining operation. What it produces is essentially 136,000 ounces per year of gold equivalent at a really low all-in sustaining cost of $814 per ounce. And so, those are great economics. That's a great starting point. $10 an ounce discovery cost, doesn't get any lower than that. And, the story here is the exploration team has done a phenomenal job de-risking this project by consistently adding ounces on a resource and reserve base year over year over the last 4 years. Another thing that we're doing right now, which is quite interesting and which we told our own shareholders about in great detail, in fact, over the last 6 months, is the existence of these low-grade stockpiles. Now, Kinross did us a great favor back in the day when they were milling, not heap leaching, but milling, taking all that mineralization that sat in a sort of a grade range of 0.2 to 0.85, essentially below their mill cutoff, And they segregated this material knowing that someday somebody was going to use this material to produce gold and silver. So what we've been doing consistently over the last 4 months is drilling off these stockpiles. Our view, and we've given guidance on this, is we believe, roughly speaking, there's probably 750,000 to 1 million ounces of gold equivalent that's sitting there in this stockpile, which has not been accounted for in any study. It has not been put into any mine plan. So imagine once defined, subject to drilling, which is ongoing right now, what that could look like in terms of future production profiles at DeLamar. It does some pretty spectacular things. And so this is what the snapshot of our PFS study looked like. Basically, we put it out about a year ago. An 8-year life of mine, 35,000 tons per day. As I mentioned earlier, $814 per ounce all-in sustaining costs on a co-product basis, producing, roughly speaking, about 1 million ounces. And so all this put together comes with an after-tax NPV5 of 314 million and a 33% IRR. So really strong economics, really quick payback, 2 years. But now imagine adding potentially, roughly speaking, maybe 400,000 to 500,000 ounces of recovered gold equivalent, what that does further to the economics. Simplistically, we can look at it and maybe add it onto the back end of the mine life, carrying that mine life at DeLamar from 8 to maybe 11 years. Or maybe what this material could look like when it's mined and processed, in addition to the in-situ mineralization that's there. And so there'll be further information on that. The plan is to put out a resource estimate sometime mid-year this year and include this stockpile material into the resource. And so that's basically a good snapshot of what's going on at DeLamar.
On the Millennial side, for any Integra shareholders out there that aren't familiar with this, Wildcat is Millennial's flagship project. It's just north of the town of Lovelock. We picked this up from a private equity group that held it, never even knew how to get to site. We picked it up in 2021. One of the key things that we really liked about this project is the extremely low strip ratio. Everyone talks about grade is king. It's more than that. Mining is like any other business. It comes down to margin, and margin is king. And one of the biggest things that goes into that is the strip ratio and the recovery. So on a strip adjusted grade basis, Wildcat is the highest effective grade open pit oxide project in Nevada, which has a major impact positively on the economics. So these are high margin, low capex ounces. The other thing we liked is in the States, there's 2 types of permits. There's a notice of intent, which gives you 5 acres of disturbance. And then there's a plan of operation. Millennial just submitted their exploration plan of operation and should receive it in the second half of this year. And what that gives us, it goes from 5 acres to 400 acres of disturbance. So we believe we can significantly grow this resource later on this year once that permit is received. The current resource sits at 776,000 ounces at a grade of 0.4 using a $1,500 pit shell, $2 ton mining for processing to G&A. The metallurgy here is very simple, heap leach operation. The recoveries look spectacular, the results that we've gotten back. And also, this will have an updated resource at the end of this year with a PEA as well. Georgian and the Integra team have done a deep dive, and Wheaton have done a deep dive, and really showing strong economics on this. Additionally, the feeder zones that produce the higher grade mineralization sit right below the pit. They were mined in the turn of the century, and that has never been drilled in recent years, and it is nowhere in this resource. So the exploration upside here and the continued news flow through the drill bit will keep the market excited for years to come. Mountain View, really another same, came from a private equity group. Very exciting, low sulfidation epithermal just outside of Gerlach. You can literally order a pizza to site. It's just off the highway. Power lines, water, everything at site. The grade here is higher at 0.57. It represents 427,000 ounces. The strip is slightly higher, but the grade is higher. The one thing that we've observed here is a lot of that strip is just all unconsolidated sand and gravel. So from an operating perspective, it'll be a free dig, so it won't be conventional drill and blast, which will lower your operating costs. The other thing we've noticed when we were drilling it last year is the feeder to this system. We tapped into it right at the end of the year. It was 100 meters outside the pit. It was 40 meters of 4 grams, showing that the exploration upside here is quite spectacular. There's a lot of post-mineral faulting, which adds to amazing leach kinetics. Those results will be continued to release. But right now, last month, we released it on the bottle rolls, and you were looking at over 89% average recovery for leachability. This is really something that gets the team excited here, is having 2 projects get to a record of decision by the middle of 2026. What this does, from an exploration perspective, why we have 8 projects is because, reality is that one will make it. Okay. From a permitting, and that's why we have so many, is to lower the risk. From a permitting perspective, when you have 3 horses in the race, it allows you that optionality and lowers your risk from a permitting perspective. Okay, you see Delamar, we will be submitting the mine plan of operations at the end of this year. It'll then go into the EIS and public consultation. From the Wildcat side, we will submit the mine plan of operations in the middle of next year. The one thing with Wildcat is because the extremely low strip ratio, there will be no waste rock facility. Okay, it'll be all in-pit dumping. It will be nowhere near the water table, so there will be no pit lake. So from a permitting perspective, it'll be done under an EA, and that's why it's such a shorter permitting timeline. And then Mountain View will come on right after that. So as George mentioned, from building teams that have the ability to do this is extremely rare. And the Integra team has done a fantastic job at Delamar. And once they're finished there, they move on to Wildcat, and then they move on to Mountain View. So keeping that team intact that has executed one after another really, really adds to the robustness of the pro forma company.
I mean, we can't underestimate how excited we are about what these projects look like when they're all put together. Some obvious synergies there. Probably the top of the list, as I mentioned earlier, the synergies with respect to this great permitting and engineering team that we've had to put together for Delamar. Basically, using the strength of that team and then having them go from one asset to another. I can't understate that one and the value to that. A lot to see on this slide. Obviously, straight out of the gate, we'll be getting to market capitalization that will sort of allow us to pass a lot of our competitors. But I think the most germane, perhaps the most exciting aspect of this deal when combined is really sort of the total resource base that you see there on the right-hand side, kind of vaulting us past our competitors. And so you can see the breakdown of resources, both oxide and non-oxide or sulfide resources that you see there kind of tip the scale at a total of 6 million ounces. And as we mentioned earlier, based on what we see looking outwards in terms of resource estimates, and this is where I'm going to say I'm making a forward-looking statement, I think we'll blow well past 6 million ounces. We'll probably hit the 7 million ounce mark within a very short period of time. But I think the rarity, the scarcity factor to this deal is on a combined basis, we're going to have about 3.5 million ounces of oxide, potentially heap leachable resources here in the Great Basin. And we know of nowhere else in and amongst the pre-development space where this endowment sort of exists today. And that's really key. Oxide ounces are highly valued and they're really rare. And when fully permitted, there's a big delta between the PNAV that we're trading at now and the PNAV that we would expect on permitted oxide ounces. That delta there is huge. So that's the aiming mark for us on this transaction straight out of the gate. And then sort of personally, what I also like about this deal is kind of forward looking and out there when fully developed. This is kind of what we think will occur. We're basically getting ourselves into a production range that's well north of 200,000 ounces per annum. And then that's when we start to compete with these companies that you see here on the right-hand side, who have these great production profiles, who also have market capitalizations of in excess of $1 billion. And that for us is kind of the aiming mark for this company longer term. 3 horses in the race, when fully developed, gets us into this sweet spot of $1 billion plus market capitalizations. And that's really the crux of this deal from our perspective.
Yeah, and as George mentioned, I think it's important that where we make money with all of us is permitted ounces on a PNAV consensus basis go for 0.89. Pro forma, we will be trading at 0.15. So there's significant value creation in the coming years on a pro forma basis. Really, where does this get us to the end of the year? Okay, we get an updated resource from Delamar that includes the stockpiles, which adds significant value to the company. The submission of the mine plan of operations, which is a material document submitted to the government and kicks off the permitting process. You get an updated resource and PEA. That'll come in June. I know I said at the end of the year, I made a mistake, but it'll come sometime in June. You get significant resource growth from Delamar, from Wildcat, and from Mountain View, and you get consistent news flow to the market from the drill bit, as I mentioned earlier. And you get a continued permitting perspective with Delamar, Wildcat, and Mountain View, and really continued engineering studies that will further prove project validation right to a construction decision. And that's really what Wheaton really liked about what we're doing here. And lastly, there's a severe scarcity of these heap leach ounces, as George mentioned. In pro forma, where we see this, and George mentioned this as well, is that pushing this over the 7 million ounce mark is really where we see this going. That would be one of the biggest resource endowments in the basin that's not owned by a major mining company. It gives us significant scalability to push over 200,000 ounces a year, which is extremely rare. Generates, an industry-leading growth story. We have the right team in place that we've really been pounding the table on. One of the biggest problems in this industry is people. And keeping a team together that does it time and time again is really what we need to do as a company. And the pro forma basis with significant financial partners gives us that strength to push these projects to the finish line. And really very excited about this. And I think this will be really the go-to vehicle for people to invest in going forward. With that, I think we can open it up for questions. Correct, Josh?
Yes, that will conclude the formal presentation for the webinar, and would love to answer some questions. Once again, if we don't get to a question, please feel free to reach out via the email that you received in the Zoom invitation. So to start, one quick question. Did you look at other companies to merge with, and why now?
The answer is yes. I mean, we were always looking for other opportunities in the Great Basin, and that's our patch, right? That's our sweet spot. What we found in the process of looking at a lot of projects was, there's a kind of a multitude of, from an oxide, potential oxide production perspective, there's a multitude of 20 to say 40,000 ounce a year potential producers out there. And then you get to a very a much smaller number of 40 to say 75 or 80,000 ounce a year production profile potential projects from a heap leach perspective. And then beyond that, there's really not a lot. And so that's where, this discussion started with Jason and the team is, what would these two assets, both Delamar and your assets, look like on a combined basis that really vaults us into that plus 200,000 ounce a year production category. And that discussion was pretty easy from our perspective. We got the social issues out of the way pretty quickly. By the way, I know there have been some questions regarding, the roles here. We can address those maybe later, but maybe I'll address those right now. In terms of my role as executive chair of this company, my face, My name has been all over the sort of the entire process in Idaho from start to finish, from acquisition, from Kinross to where we're at now, on the cusp of getting a mine plan of operations in place. And so this transaction sort of allows me to focus strictly on that, delivering on a permit and a feasibility study to the finish line in Idaho. And while I'm doing that, Jason Kozak, my colleague here, is going to be handling everything else to do with the capital markets, the market-facing aspects that, quite frankly, I'm not going to have a lot of time for because I'll be delivering on what needs delivering in Idaho. So I'm still the face of everything that goes on there. I know the exec chair aspect for some beg the question, does this mean retirement for Salamis? And the answer is no bloody way. I'm leading the charge in Idaho. And Jason's going to be doing everything else. There you go, Jason. Over to you. Hot potato.
Yeah, and from our side, when we were building the Millennial portfolio, we looked at over 367 projects on desktop review and did over 72 site visits. So to answer your question, yes, we've looked at a lot of projects. And really saw the Delamar project and the team that George has built as really our favorite one. It was unparalleled to anything else that we looked at.
Just a comment on the concurrent financing. How long will that last, and what can you deliver with that use of proceeds?
Yeah, maybe I'll jump in on that one. So first off, let's take a step back and sort of describe what Wheaton and BD bring to the table. In my view, anyway, that's a strong hand to have in terms of two really big financing groups marching in lockstep to the finish line when it comes to financing our needs to get there, and not only get there but beyond. We're talking project financing. Two of the strongest parties in the industry supporting us, who have been extremely fair to deal with up to now, is a real benefit. Again, it's great to have all these assets, but you need to have somebody, some strong bench strength who's going to follow you right to the finish line, and that's what we get both with Wheaton and BD there. In terms of the sort of use of proceeds that we've sort of defined relative to the deliverables that my colleague Jason has put out there, that's a lot of stuff to deliver in the space of what we think is potentially a year. And the budget allows us to deliver on all of that. Hopefully that answers the question.
Yeah, and I think on the Millennial side, all of the institutional shareholders that we had, over 50%, all participated in the financing. And these are long only big, pension funds, billion-dollar long-only gold funds. So it's very, very supportive shareholder roster that'll push us to the finish line and be supportive the whole way through.
And follow-up question, Jason. Oh, sorry, Andre.
Sorry, I'll just add for any questions related to the financing or BD or Wheaton, everything is described in our February 27th press release. And one thing maybe I should have mentioned when I spoke about Wheaton Precious Metals earlier is that they are investing, so it is straight equity, and they are investing along the rest of the shareholders in the brokered financing. We expect Wheaton Precious Metals pro forma ownership to be around 9.9%. They will also be acquiring a right of first, a roll first or a right of first refusal. So just to be 100% clear, we're not selling any royalty, we're not selling any stream at this point. It's just a ROFR. And again, all the details are in the press release from yesterday.
Perfect. A question for Jason. Where do you see the long-term view of Red Canyon and the other various exploration assets that Millennial has and will be bringing into the pro forma company?
The same thing. We're not changing really the strategy here, and we are still going to advance all of those exploration assets. They do get a smaller portion of the budget. Red Canyon is an amazing, exciting story. Okay, we all know it's in the Wenban Formation, 35 kilometers south of the Cortez complex. some of the highest grade intercepts globally drilled in 2021. And stuff like that in the portfolio that we have really gives you, the shareholders, optionality and free carry to have a game-changing discovery. So those are still going to be going on in the background, and gives you that added torque in this portfolio that has projects that can be significant game changers that there's no value ascribed to them right now.
One more question related to BD as well as the long-term goal of the pro forma company. Is there anything further that we could to discuss about BD? And I think the quick answer to that is, the terms of the BD agreement and the changes to that are outlined in the news release, and additional information regarding that will be filed on SEDAR in the future as this deal consummates. The second part question is, what is the goal of the new company? Is the goal to become a mid-tier gold producer? Is the goal for further M&A? Where do you see this going into the future? And obviously, this is a very much a forward-looking statement coming out of whoever's going to answer that. But what is the vision here?
I'll handle the BD aspect, and then Jason, I'll hand the vision part to you. I think we're both sincerely aligned. We were since day one, right? And that's part of the beauty of this deal, was that typically these mergers of equal involve egos clashing once in the same room. And you and I saw eye to eye and have been in lockstep ever since in terms of the grand vision for this company, supported obviously by the executive, right, of the individuals that you see on the webinar today and the entire team. So everybody kind of shares that vision. Jason, I'm going to hand that one to you in a sec. But with respect to BD, so the terms of the BD convertible debt facility that we launched on in August of last year, those are well defined. I'd ask you to sort of take a look at those on the website. In terms of the tweaks that were required in this transaction, obviously sort of BD needed to be convinced that this was a transaction that they needed to support, and they needed to be in lockstep with us. And so their view was, okay, we'll support this deal. We'll support it financially, and they'll support it in the equity, which is what they're doing as part of this financing. But to pay homage to the fact that interest rates have gone up notionally from the time of last summer to now, there was a slight increase in the coupon from 8.75 to 9.25, which we certainly don't see as egregious. We see that as very fair. In terms of an overall coupon rate or an interest rate for a project like this, 2.5 to 3 years away in the context of Delamar and even further out, we believe that the terms that they sort of mandated to be on side with this deal are certainly very reasonable in the context of other deals that are being done today. Again, you can't underestimate the value of having BD, in the bullpen, ready to sort of provide project financing in lockstep to get to the finish line and beyond. So hopefully that answers the BD aspect of the question. Jason, over to you for the grand vision.
Thanks, George. What we're trying to do here is build the go-to vehicle and be a mid-tier producer is what we're trying to do. Okay. And really, we believe there is a lot of other stranded single asset companies out there that we believe we can tuck in and be that roll-up vehicle, consolidation vehicle that the industry really, really needs. And we can tuck those in once we get a currency, okay? Frankly, there's just too many companies out there for an example, just on a G&A level, at a corporate level, we're saving, around the $2 million US a year by putting this company together. Okay. And that money can go on the ground. All that said, projects with this size and scalability, and amount of de-risking that have gone into it from a permitting perspective and an engineering perspective, we become a significant target. And things are always for sale for the right price. That being said, okay, but really we want to be the consolidator in the Great Basin and push that to a mid-tier producer in the coming years.
Thanks, Jason. Quick question for you, Andre. Can you just take us through the transaction next steps to close and what is required, including is a shareholder vote required on both sides?
Thanks, Josh. So we don't anticipate a shareholder vote required on the Integra side, but a shareholder vote of Millennial shareholders will be required. The next big step, obviously, will be the mailing of the circular, which we expect most likely in the third week of March or late March, and then the shareholder vote. And the transaction is also subject to exchange and regulators' approval. So we'll be advancing that as well in parallel.
Thank you so much. I guess the other question, and I think you did answer it, George, but why do you feel that as executive chairman, this is the time to spend more of your time on actually the development and the permitting of Delamar?
I think the simple answer is Delamar is and will always remain the flagship. And it's the most near-term value that can be accreted to our shareholders and stakeholders is there. And so my primary responsibility over the next sort of 2 to 3 years is to deliver on that. And so there are two key aspects to that. That's the permit, which is key, and the feasibility, which is also key. And again, my face, my name, my soul has been there for the last couple of years and will remain there. And, stakeholders need to see me there. The government needs to see me there. The BLM needs to see me there. This is a full-time job for me, beyond a full-time job. This step alone is usually a full-time job for someone, and it's my responsibility. Everything else, from a management perspective, is going to be sort of Jason's job, especially the capital markets facing aspects of managing a company, which quite frankly take up a lot of time and a lot of bandwidth. The ability for me to step back and away from that partially and focus on delivering on Delamar is key, and it's a full-time job.
I think perfect. One last question, and then I think we'll wrap up the question and answer session. If you do have any additional questions, please feel free again to reach out to the email that you received in the Zoom invite, which is investorrelations@integraresources.com, and we'll get back to you. This one is, first a quick comment. The name of the new pro forma company is going to be Integra Resources. But one of the questions, and best maybe to both Jason and George, as you are both geologists, from a low-hanging exploration upside potential, what gets you the most excited at each of your projects?
Okay. I guess I could kick it off, George, and then I'll pass the
buck. I can't believe they're asking two geologists to talk about exploration upside. It's a bit of a layup, man, but you go for it. Tell us what you like about Delamar, and I'll tell you what we like about your projects. How's that?
Oh, that's a good idea. I like that. At Delamar, the one low-hanging fruit is obviously the stockpiles. That adds significant, and I'll make a forward-looking statement here, it adds probably around 180 to 200 million of NAV, okay? That's significant value creation for everyone here. Not only that, the feeders to these systems, as low sulfidation systems form, right now you're only looking at the low temperature chalcedonic cap of these systems, but the feeders that come down that are the main plumbing system, I believe that there's significant potential to add high grade ounces. They're very similar to stuff that you see at Sleeper. So between that and Black Sheep, I think there's a lot of exploration and discoveries to be had yet.
Thanks, Jason. I mean, from our perspective, it's pretty simple. We did a lot of due diligence on their asset, including validation of resource bases involving, ourselves, our internal team doing that work, and then vetted by third parties. In the process of doing that, what we found was there was data that's outside of their resource envelopes, obviously PIC constrained resource envelopes, that really pointed to a lot of upside. But those data points in the form of either surface outcrops or actual drill holes with significant intercepts were too far outside of the resource envelope to count as actual resources. What we believe, though, there are points of connection between the data points that I just mentioned and the resource that, when infilled, would add a lot of ounces. And I think that there are some really obvious targets. It was really clear to us, for example, in the process of doing our due diligence, that this is a company, MPM, with great exploration bench strength, but they were kind of hamstrung by the 5 acre of disturbance rule, which plagues us all in the U.S. from an exploration perspective. That was really sort of hamstringing them in terms of really stepping out. So the fact that Jason and his team have filed this exploration plan of operation that allows them to go from 5 acres of disturbance to 400 acres of disturbance will really allow them to hit that exploration upside hard. Not them, us, on a combined basis. And we believe that there is tremendous upside in that, perhaps maybe even 1 million ounces or more of oxide. That's key. Mountain View, similar situation. These targets are a bit more blind because they're covered by pediment and alluvials. But where we see the potential there is this kind of the bounding range front fault that shows indications of a lot of exploration upside potential as well there. Again, another 500,000 ounces is not beyond the realm of possibility on that project. So you put that all together, it's immense. And we like that. To Jason's point, obviously on a combined basis, will be entering that phase of permitting where, we're basically doing studies, but not adding a tremendous amount of value, not adding a lot of sizzle, quite frankly, during that period. Having the ability to permit and also do all that exploration on Jason's projects, which is going to add ounces from our view, and exploration sizzle is really critical at the bottom point of that Lassonde curve. That's a critical aspect of this deal. We like their projects a lot.
Perfect. Thank you, George and Jason and Andre. This concludes the webinar question and answer session. And it concludes the webinar on the news release dated November 27th, 2023 on the at-market friendly merger of Integra Resources and Millennial Precious Metals. Thank you so much and have a good day.
Thanks, everyone.
Thank you, everyone.